Well, a Melbourne Cup Day rate cut is on the cards after the latest inflation figures came in lower than expected. It's got the market and many economists betting that the first interest rate change in a year will be down, handing out what homeowners and retailers hope will be an early Christmas present. Simon Palin reports.
The latest reading on inflation was highly anticipated by the market. This time last year, the Reserve Bank seized on inflation figures to raise interest rates. Now there's a feeling that weakening inflation could trigger a rate cut. The new figures show consumer prices rose 0.6% in the September quarter.
Certainly the numbers for inflation were a bit lower than was generally expected.
Price rises for power, alcohol and clothing were offset by falling prices for vegetables, computer equipment and petrol. The annual headline inflation rate is 3.5%. The Reserve Bank looks at the underlying rate, and that is well within its target band. Many economists say it gives the RBA good reason to cut interest rates to 4.5% next Tuesday.
We think now that there will be a 25 basis points cut in November.
But not everyone agrees.
We think that they'll be on hold till the end of this year. That's our central case at the moment. But a lot of this depends on what happens globally at the moment, and in particular what happens in Europe. All eyes are on the results of the EU summit, which we're going to find out tomorrow.
Even before the figures were released, the RBA Deputy Governor hinted that a rate cut could be on the cards.
The softer global outlook have made the outlook for inflation less concerning than it was, and it provides scope for monetary policy to be supportive of economic activity if needed.
There would be absolutely no excuse for the banks not to pass on any rate cut that was delivered by the Reserve Bank should they choose to do so.
It's by no means a done deal, but the heightened prospect of an interest rate cut is good news for home borrowers and for business groups who say it'll provide some much needed relief for consumers in the lead up to Christmas.
We need to restore consumer confidence levels, which are now at very subdued levels, and a rate cut would certainly add to overall demand in the economy.
The inflation figures sent the Australian dollar more than 0.5% lower against the greenback.